And we are officially off to the races. Stocks open down here on the floor of the New York Stock Exchange after a celebratory podium, of course, celebrating financial literacy. It is so important for our viewers, for our Americans to understand how to manage their finances and, of course, their investments. And so joining me now to talk more about how to make the most of our investments, especially in this market environment, is Michael Reinking, Senior Market Strategist for the Stock Exchange. Michael, welcome. Dow record close yesterday. What do you make of it?
Well, first and foremost, welcome to the New York Stock Exchange family. You've been a member of this floor community for a very long time, actually preceding my time down here, but now we wanted to just officially welcome you, and hopefully this is our first conversation of many. Yesterday we did have, the Dow close at a record high. Most other major indices are also kind of hovering right around those levels. And we've started to see, kind of following, that Fed, speech at Jackson Hole last Friday, we did start to see that rotational activity kind of start to come back into the market, and we saw that yesterday as well. And then this morning we're just a little bit lower coming out of the open here. We're seeing a little bit of weakness in those tech stocks ahead of the big Nvidia earnings that we have tomorrow after the close. So we're seeing a little bit of profit taking after the very sharp rally that we had to start coming out of that weak start of August.
I much appreciate the warm welcome, and for our viewers, I have been following your market notes for many years. You do a great job, and I'm so glad that you can be an expert for us here at the opening of trade. Our viewers definitely need your insight, and you mentioned Nvidia. I want to talk more about that for people watching, just how important, how much can Nvidia's direction after earnings really impact the overall direction of the market?
Yeah, so we have seen Nvidia actually start to rival big economic reports over the last kind of couple quarters. Where we've seen over 1% moves in the S&P 500. It does make up about 7% of the S&P 500, right? And it's very heavily weighted in kind of the semiconductor kind of ETFs and things of that nature, right? So it's a very important stock for the market from this perspective. Clearly that AI theme is kind of really important, and I would imagine that the numbers are going to come in very strong yet again. It's really going to be about how markets react, right? We have seen some of the other kind of AI names put up pretty solid results, but we've seen kind of a negative reaction. We'll have to see how kind of investors react tomorrow.
Even for many Americans who are probably on their summer vacation right now, you definitely want to tune into our coverage, because these markets will react, especially after those results from Nvidia on Wednesday. As you mentioned, Michael, let's talk about that Fed decision. Next Fed decision hitting Wednesday, September 18th. What's your expectation?
Yeah, so last week, Chair Powell clearly put the prospect of a rate cut kind of very much on the table. The question has really started to become whether that's going to be 25 or 50 basis points. Coming out of the June summary of economic projections, I started to suggest that when they adjusted their unemployment target rate to 4%, right, that had really lowered the bar for them to begin to begin the easing cycle here. Next week we do have the BLS employment report. That is going to be the key driver as to the path going forward. But I think really the bigger question is not 25 or 50. Kind of at September. At this moment I would lean to 25. But I think the real question is, what is this cycle going to look like? Are we looking at 75 or 100 basis points, right? Or are we looking at something, taking us back closer to a neutral rate, something over 200 basis points, over the next year or so, all right? And, if you're looking at kind of the former as opposed to the latter, right, they have very different market implications, right? So if we're just, easing policy a little bit and we're not seeing that real steep decline in economic activity, that's a much more market positive, kind of scenario.
Michael, we do have some images of our Bell Podium ringers signing the wall, one of the classic celebratory things to do after you ring that Bell Podium. You put your name on a wall. You're going to join names like The Rock, Serena Williams. even Goldman Sachs' CEO David Solomon, who have signed this wall. It truly is incredible and a way to make your mark here at the New York Stock Exchange. As we take that all in, Michael, I want to go back to the Fed, right? So we talk so much about interest rates, and really I think the way to break that down is for our viewers, that would mean potentially lower mortgage rates, even perhaps credit card rates that could come down. As we know, credit card debt is at a record high.
Yes. Yeah, and we have started to see mortgage rates already begin to ease, right, as kind of the 10-year yields have started to move lower, right. That the big question from a housing perspective is really about kind of the supply, right. We know that there is this demand. It's really about bringing that supply back onto the market, but it is going to help kind of potentially help to kind of recharge the housing market, which is has implications across the economy, just in terms of consumer spending and other aspects of the economy. So that's a really big part of the U.S. Kind of the U.S. backdrop.
I think one of the most important things that you've said in our conversation here is the jobs report, right? The jobs report is relatable to everyone out there. And most notably, just at the Fed's most recent meeting, finally, jobs did become a focus. For years, it was about inflation. Now the Fed is keeping a close eye on the jobs market. Talk to me more about what they'll be looking for in that jobs report that you referenced coming up.
Yes. So, we did see a revision to by the BLS last week to the number of jobs created, and that was a negative revision of about 800,000 jobs. So that removed about 68,000 jobs on average per month. Last month, if you think back to the beginning of August, right, and that really sharp sell-off that we'd seen, part of that was triggered by a weak employment report. I think there were some kind of weather factors kind of within that report. So I wouldn't necessarily be surprised if we see a positive revision, right, and potentially a little bit of a stronger number here, right. But if we continue to see that unemployment rate moving higher, right, that is what the Fed is going to really key on. So we've moved up to about 4.3%. That's I think it's about 0.8% off of the lows that we've seen in the trailing 12 months, right. Historically, that's actually not a particularly high number, but as we've seen in past cycles, as you start to see kind of that labor market turn and that unemployment rate begin to move higher, it does tend to pick up momentum. Now, there have been some positive drivers of that increase in the unemployment rate, namely an increase in the labor participation, right, and then immigration, right. So that has been kind of the driver. So those are actually kind of positive reasons for the unemployment rate to be moving a little bit higher. But we're going to just need to see kind of the kind of absolute number of jobs created and whether we continue to see that 4.3 moving higher. If you do get into that 4.5% range, that would definitely kind of put that 50 basis point cut on the table.
It seems like this so-called soft landing is still very much on the table that the Fed has been talking about.
Yeah, and I mean, it very much, the data has been mixed, but we're not seeing any real signs, of a sharp decline, right? The consumer spending numbers were very positive last month. We've seen, we had Walmart put up very, very solid results, right? And the other retailers have also been putting up, kind of pretty strong numbers. We are going to continue to hear from those retailers, really starting after the close today, kind of through the back half of this week, right? So, the consumer has remained resilient, right? We're hoping to see kind of a little bit of a pickup in kind of the housing market as we see rates moving a little bit lower, right? And the corporate activity has kind of moderated, but it is not, but we're continuing to see kind of capital spending numbers and things of that nature hold up, pretty well. So there's that soft landing does seem to be, kind of very much on the table.
Soft landing would be good. Heading into the back-to-school season, Michael Reinking, thank you so much for joining. As always, he's a market strategist here at the Stock Exchange.